History has shown that in circumstance where social trust deteriorates, particularly social trust around the purchasing power of instruments denominated in fiat currency, that a fairly small investment in precious metals and precious metals equities provides sufficient insurance that one is taken care of. If you revisit the arithmetic in the 1970s bull market, at the beginning of that market, gold was selling for an admittedly price-controlled $35 per ounce. At the end of the cycle, it was trading at $850. What is that, a 20-fold increase? If 10% of your portfolio generated a 20-fold increase, you could afford a 50% decline in your debt and equity portfolios. If you want a less dramatic example, let's look at the 2000 to 2011 bull market, where the gold price went from $250 an ounce to $1,900. In fact, let's cut that number substantially. The circumstances behind explosive up moves in precious metals generate such extraordinary up moves in the precious metals that the amount of portfolio insurance that is delivered by precious metals and precious metals equities is such that the amount of precious metals that you need to hold in your portfolio relative to other asset classes is small. One of the things that happens when I address audiences like yours is they seem to discount the fact that precious metals bull markets don't, over the course of an entire bull market, generate 20 or 30% returns. They generate 300 or 400 or 500 returns. So while it isn't certain that we are in a precious metals bull market or will enter into a precious metals bull market, I believe that it's likely, and I believe that the upside in precious metals is substantial enough that a 10 or 15% holding in one's portfolio can insure against a 50% loss in other portions of a person's portfolio. And that's the sort of approach that I would suggest for your listeners. In my heart of hearts, if I'm right, and that we're 40% of the way through a precious metals bull market, in my experience, the second half of a bull market is much more dramatic than the front half. And if I'm right, I don't think that the silver price goes from $20 to $30 or $35. I think the silver price could easily, don't put this as a clickbait title, I think it could easily triple or quintuple from here.
Yeah.
I don't think that the gold price would be limited in a move from $1,800 to $2,500. A circumstance in our economy where the arithmetic that we talked about earlier played out in people's psyche means that I could see easily metals prices doubling or tripling, and I could see an intelligently constructed equities portfolio, not comprised exclusively of the penny dreadfuls, but some quality stuff. I could see that portfolio substantially outpacing the gains that one enjoyed in their precious metals. The point of all this is that while the circumstance that we talk about isn't a certainty, it is a strong enough probability, which is a bigger word than possibility, that people would be well advised to have at least enough of their portfolio in precious metals that it hedged or insured around the rest of their portfolio and, in fact, their lifestyle. Precious metals bull markets are brought on by fear buyers, first of all. Other asset classes respond less to fear. But now to your question. If past is prologue, in the 1970s bull market, given that metals hadn't moved for a very long time, it probably took 2.5 or 3 years of experience of inflation before the fear associated with inflation set into generalist investors. And I would suggest that we experienced the same thing in the 2000 bull market, meaning that the conditions precedent for the bull market were expressed in the market for a full 2 years or 2.5 years before the market itself responded. The market that we're in right now, I think, has experienced probably 40 years of benign climate, which is to say declining real interest rates, increased availability of liquidity. And the consequence of that is that people don't fear inflation. They don't fear disintermediation, and they don't fear the potential impact on the pricing of other savings and investment products that would occur as a consequence of higher interest rates. I myself believe that we're in a circumstance where faith in the economy and faith in the government remains very high. I do believe, however, that the reality of the depreciation of the currency that has thus far been acknowledged by the authorities, the 6.5%, relative to the nominal interest rate paid on savings products, 1.5%, as an example in the US 10-year Treasury, will provoke a circumstance where ordinary savers look at the returns they get on conventional savings and investment products and understand that they need to defend themselves.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race, you're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dahn, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dahn.